Interest rates keep breaking new lows, and low mortgage interest rates mean it's a little bit more affordable to own a home, but home prices keep going up, and this pandemic has not gone away. So if you're wondering if it's still a good time to buy a home during this economic crisis, make sure you watch this video until the end. What's up everybody, I am Jasprit Singh from the MinorityMindset.com, where money minds rethink rich. As interest rates come down, owning a home becomes a little bit more affordable because now your mortgage payments are a little bit lower. But what happens when interest rates drop is more people are interested in buying a home because everybody thinks, oh, it's cheaper to own a home, so more people go to buy a home, and this new demand to buy a home pushes home prices up. Typically what we see happen is every time interest rates are cut by 1%, you will see the value of homes go up by around 11%. That being said, interest rates are still lower than we've ever seen before, which means you can go out and borrow money for cheap to buy an asset like a home that you can build equity on. But this economic crisis and pandemic is still kind of lingering on, and we don't know what's going to happen once this pandemic kind of goes away, and we don't know what our economy is going to look like. Are we still going to be in a recession? Is this recession going to get worse, or is the economy going to get better? Plus, chances are you've probably heard people talk about a potential real estate crash. So buying a home during an economic crisis like this can be very tricky because on one hand, you don't want to buy a home and then as soon as you buy it, you find out that interest rates dropped even more, and so you could have saved even more money on your monthly payments if you had just waited a little bit. On your second hand, you don't want to buy a home and then find out that the economy is going deeper into a recession. And on the third hand, if you have three hands, you don't want to buy a home and then find out that real estate prices crashed. I don't have a crystal ball. I cannot predict what's going to happen in the future, and I cannot tell you that the best time to buy a home is going to be in 2 months. Nobody can do that. What I can tell you is what's going on in the market, and I can kind of tell you a little bit about the ins and outs of buying a home because, you know, I am a real estate investor, I'm a real estate salesperson's license, and I am an attorney. That way you can make a smart decision for yourself. Let's jump right into things. Let's start by talking about what if there is a real estate crash. I'm going to answer that, but before I do, I need you to do me a quick favor and smash that thumbs up button below, because of the way the YouTube algorithm works, if you do not smash that thumbs up button, then YouTube is much less likely to show you and other people our financial news and education videos. A real estate crash is when home prices drop by 20% or more. So if you buy a home for $100,000 and the value of your home drops to $80,000, that would be considered a real estate crash. If you are a homeowner, you do not want to see a real estate crash because that means your wealth is dropping because the value of your home is dropping. So if you're buying a home, you don't want to see a real estate crash. The concern here is obviously, well, we're still in an economic crisis because this pandemic has not gone away. Lots of people have lost their jobs, lots of businesses have gone out of business, and we don't know what our economy is going to look like once this whole pandemic kind of goes away and after the lingering effects of this pandemic and recession end. On the flip side of things, you have to also understand that real estate doesn't work like the stock market. In the stock market, when you see a crash, it can happen almost overnight. Like when the March 2020 stock market crash happened, it was very fast. That was the fastest stock market crash we have ever seen in history. And the reason why the stock market can crash so fast is because people can buy and sell stocks in an instant. Like you can buy and sell a stock in 2 seconds, but you can't do the same thing in real estate. It takes months, if not a year, to conduct a whole real estate transaction. So if, again, keyword, if there is a real estate crash, that's not something that happens overnight. It's something that takes years to build up and years to develop. It's not something that's just gonna blindside you and come out of nowhere. You're gonna see a crash come down like this. Like even during the 2008 real estate crash, things really started heating up in 2005. Then we felt the real problems of the real estate crash in 2008. But real estate home prices did not bottom out until 2012. That's 4 years after 2008. So sticking with the worst case scenario, if things do go bad in real estate, it's not going to be a sudden drop in real estate prices. It is going to be a slow, gradual drop in real estate prices that could take years. So if you're waiting for a real estate crash to buy a home, for one, we don't know if there's going to be a crash or not. And for two, if there is a crash, do you really want to wait years before you want to own a home? If you're really looking to buy a home to live in, then you shouldn't really be worried about a real estate crash. That should not affect you because you're buying a home for sentimental purposes. You're buying it to live there and to use. And so the real question you need to ask yourself is, can you afford a home? Let me diagram out the worst case scenario situation because I think a lot of people are worried about a real estate crash and that's hovering over their home buying decision. So let's say you buy a $500,000 home. Now, you live in this home, you treat it like your home, you take care of it, and then the real estate market crashes. So now, worst case scenario, the value of your home drops to $400,000. You're still living in your home, you're still making payments, you're still going to work. But now, here's the thing. The value of your home dropped to $400,000, but if you're living in the home and you're not selling it, this really doesn't mean anything. This is kind of like an imaginary number because this $400,000 value only has value when you go to sell your home. If you don't sell your home, then you don't actually lose any money, because now what you can do is you can ride out the real estate crash. If real estate markets do crash and the value of your home drops, you're not required to sell your home at a loss, especially if you can afford it, meaning you bought it with enough equity so you're not underwater even if real estate prices crash by 20%. So now what happens? Well, if the markets crash, you can just continue living in this home, and then eventually real estate markets are going to go back up, and then when markets go back up, you can decide to sell your home if you need to, and then you don't actually lose any money. Or the alternative, if you do have to leave your home, you don't have to sell it. You can rent it out until home prices go back up. If you plan on living in your home for a while, then you should not let the market decide what you do with your home. You gotta be the one that decides what you do with your home, because the home that you live in is a home. It is not an investment. If you want to buy an investment, we're talking about an investment property that you can rent out to somebody else. The home that you live in is the property that you live in. You're not making those home buying decisions based off of the market. You're making those decisions based off of what's best for you and your family. Nobody can predict if a real estate crash is gonna happen, or how big it would be, or when it would happen. So you need to make decisions that are best for you, which means buying a home that you can afford. And when it comes to affordability, there are 3 things that you need to pay attention to, because this is going to protect you from a worst case scenario type of situation. To afford your home, you have to afford the down payment, your monthly payment, and your closing costs. If you can afford the home that you live in, then chances are you're going to be able to survive any real estate downturn if we have one. So let's talk about your down payment really quickly. If you want to afford your down payment, that means being able to put down at least 20%. For monthly payments, that means your monthly payment should not be more than 1/4 or 25% of your take-home income, and your closing costs are going to depend on your mortgage and the type of home that you're buying and everything in between, but it could be anywhere between 1 and 4% of the value of your home. Make sure you factor that in and also include moving costs, because a lot of people forget that. But if you can afford these things, then you're going to be able to afford a downturn if we have one. I already made a super in-depth comprehensive video where I went over everything you need to know when you're buying a home. So if you want to watch that video on YouTube, I will link it for you up here and in the description below. Before we get into talking about finding a dream home, let's talk about interest rates, because the interest rate environment is something like we have never seen before. Mortgage rates in the United States during this economic crisis have broken a new record low, not 1 time or 2 times or 3 times or 4 times or 5 times, but 13 times. Naturally, people are wondering, okay, so if interest rates keep going lower, should I just wait it out? That way I can get a better rate on my potential mortgage in the future? That is a possibility. There is a chance that we could see interest rates go down even more. But interest rates are already historically low. And so eventually interest rates are going to have to go up. I mean, when you hit rock bottom, the only way you can go is up, unless you go negative, which is a possibility with interest rates, but we don't know that. But what we do know is that interest rates are near rock bottom, and even if interest rates do go lower, you still have a great interest rate. I look at trying to time interest rates at the bottom the same way you try to time buying an investment on the bottom. There is no way to predict when that bottom is going to be, and if you wait too long, eventually, if this is a good investment, it is going to turn around and it's going to go up, and you're going to miss the opportunity to get a good deal. In the grand scheme of things, mortgage rates are at great rates, and so if you lock in great rates today and then you find out after you buy a home that mortgage rates drop another 0.5%, you shouldn't be upset, because you still got a great rate. It's better to have a great rate and maybe not get the best rate possible than to miss out on the opportunity to get a great rate altogether. The same goes for those of you who are homeowners looking to refinance your mortgage. This is still one of the best opportunities in the history of time to refinance your mortgage, because we have never seen interest rates this low before. So if you have a mortgage, you can save a ton of money on your mortgage just by going out, refinancing, and getting a cheaper loan. Just make sure you're shopping around, because some lenders, whether you're talking about a mortgage or refinance, are going to charge you a whole lot more for the exact same loan than other lenders will. So you want to make sure you're getting the best deal, which is why it pays to shop around, literally, and one of the easiest ways to do that is by using a mortgage comparison website. And the following is an advertisement from our sponsor Credible, who operates a mortgage mortgage comparison website. At Credible, you can compare pre-qualified mortgage or refinance rates at no charge to you. They have multiple lenders competing on their marketplace, so you can compare great rates and pick the option that's best for you. The process is really simple. All you have to do is go onto Credible's website and enter in a few pieces of information, which just takes a few minutes, and then Credible will present you with actual pre-qualified rates from different lenders. That way you can compare. The pre-qualification process is easy to use. It only takes a few minutes, and checking pre-qualified rates does not affect your credit score. So if you want to learn more and see what mortgage or refinance rates you might qualify for, I got the link to where you can do that with Credible in the description below. Credible does pay Minority Mindset an advertising fee when you submit a pre-qualification request, and Credible Operations Inc. NMLS number 1681276 is not available in all states. So if you want to learn more and see what mortgage or refinance rates you might qualify for, I got the link to where you can do that with Credible in the description below. Third, now let's get practical about actually finding your dream home. If you can afford to own a home and you're okay with interest rates, now it's time for you to actually go out and find your dream home. The only issue right now is there's a very low inventory of homes actually available for sale. We are in a very strong seller's market, which means we have a ton of buyers out there, but there aren't that many sellers. There's a few reasons why we have this small inventory of homes available for sale right now. Some people just don't want to sell their homes. They like their homes, they're happy. Some people are in this mortgage forbearance program, so they don't feel like they have to sell their homes. And other people are waiting for this pandemic to end before they start selling their home and before they start looking to buy a new home. This smaller inventory of homes might make it a little bit harder for you to actually find your dream home, so you might be thinking, okay, I'll just build my dream home. The issue with building your dream home right now is that there is a big shortage in the construction labor market, so there's not enough people out there actually building homes, and there is a shortage in construction materials. This is not to say that it's impossible for you to go out and build your dream home or for you to find your dream home. This is just to say that it might be a little bit more difficult now because we have a smaller supply of homes available for sale, and it might cost you a little bit more to build your home because there's this added cost of extra labor and added cost of materials, not to mention the fact that you might have to wait a little bit longer just because of this big shortage in the housing market. We have a lot of uncertainty ahead. I have said this 100 times now. There's no way to predict what's coming in the housing market or the stock market or the economy. All we have to do is take care of our finances and make smart financial decisions. That way, even if something bad happens, we're prepared. If you enjoyed this video, here's the video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. Now let's do some savings math to see how much money you're really going to save. I can't do this in my head, so I already did it out for you. If you're saving $97 a month, remember, so if you refinance, you're going to save $97 a month. If you save $97 a month,